Hello everyone. I will teach one of the most important topic of the accounting. Today's topic is journal. It's the most important topic of the accounting section. Okay, let's start today's topic journal. Journal in simple meaning. Daily transaction are recorded in the book is called journal. Not every transaction, only financial transaction or monetary transaction means money transaction. I will give you an example. Suppose Ram is a shopkeeper and Syam is a customer. Syam purchase biscuit from the Ram and Ram sell the biscuit to the Syam. Syam pay the amount for the purchase of the biscuit. This is the financial transaction or monetary transaction. Every financial transaction impact at least two accounts. While one account is debited, another account is credited. This means that a journal entry has equal debit and credit amount. Journal entry is also known as book of original entry, as it is the first place where transactions are recorded. Journal entry consists of the correct date, amounts to be debited and credited, narration of the transaction, and ledger folio number. The journal entry format contains 5 columns. First, date. Second, particular. Third, ledger folio number. Fourth, debit amount. Fifth, credit amount. Okay. Now next is golden rules of accounting. It is a traditional approach. Classification of accounts in traditional approach. There are two types of classification of accounts in traditional approach: personal account and impersonal account. Personal account, there are three types of personal account: natural personal, artificial personal, and representative personal. Natural personal means human being. Hence, in this type of category, accounts of human beings are involved. For example, Ram's account, debtor accounts, creditor accounts, proprietor's capital account, and proprietor's drawing account, etc. Second one is artificial person. Artificial person are those person who are not human but they can work like humans. In the eyes of law, they are competent to enter an agreement like a human being. For example, Mohan and company, firm, corporate body, society, bank, and any government body like a municipal corporation, etc. Third one is a representative person. In this type of category, accounts representing person like a natural or artificial or a group of person are included. Actually, when nominal account become outstanding or prepaid, they are called a representative person. For example, salary outstanding account, prepaid rent account, etc. Now discuss with impersonal account. Impersonal accounts, there are two types of impersonal accounts: real accounts, nominal accounts. Real accounts, accounts of tangible and intangible properties and possession are included in real accounts. The real account may be tangible real accounts and intangible real accounts. Tangible real accounts comprise of those things which can be seen, touched, and measured. For example, furniture, computer, building, stock, cash, etc. Intangible real account means intangible real accounts consist of those items that cannot be seen, touched, and measured but have a monetary value, such as a trademark, copyright, patent, and goodwill. And second one is nominal account. Accounts which related to the expense, losses, income, and gains of the business concern are known as a nominal account. For example, rent account, salary account, commission accounts, etc. These accounts are also known as a temporary account because depending upon their nature, direct expense or indirect expense, these accounts are transferred to the trading and PL account at the end of the financial year. Rules for debit and credit according to traditional approach. Types of account. Rule for debit and rules for credit. First, personal account. Debit the receiver and credit the giver. Real account. Debit what comes in and credit what goes out. Nominal account. Debit all expenses and losses. Credit all income and gains. Under modern approach, accounts can be classified in 5 categories. First, assets account. Second, liability account. Third, capital account. Fourth, revenue account. And fifth one is expenses account. Rules for debit and credit according to modern approach. Types of account, rules for debit and the rules for credit. First one is assets account. Debit the increase and credit the decrease. Liability, debit the decrease and credit the increase. Capital account, debit the decrease and credit the increase. Revenue account, debit the decrease and credit the increase. And expense account, debit the increase and credit the decrease.